Hello, welcome to the Bitcoin Standard podcast. Our guest today is Philippe Bekhazi. Philippe is the CEO and founder of XBTO. XBTO is an institutional grade provider of financial services for Bitcoin and crypto company at large. And some of you might have seen them because a little known athlete by the name of Lionel Messi happens to have their logo on his jersey with his team, Inter Miami. So they've been sponsoring Inter Miami since before Messi showed up. And when he showed up, he was wearing their shirt for a while. I hope you're ready to talk a lot about football, Philippe, because that's... No, I'm joking. We're not going to talk about football. We're going to talk about XBTO. So welcome, Philippe.
Hey, Saif. Good to be here. I can speak about anything. I love football. You know, it's the Euro 2024 right now. So
oh, yeah? Oh, okay. I didn't know that.
It's front and center right now.
Who are you cheering for?
Usually France. Usually France. How they do?
They haven't looked this good this year. They haven't played very well. Two first games, they didn't look too good.
Yeah, they're a little bit behind. I think usually they go like this. It's by fits and starts.
Yeah. Although I'm cheering for Holland because they have a Bitcoiner, Stefan de Vrij, their center back. He started against France. He's played really well in the first two games, and he's a Bitcoiner. So I'm cheering for them. I hope they win it. And then they're the orange team as well. We're the orange coin.
That's right.
Yeah.
Awesome.
All right. So Philippe, tell us a little bit about your background, how you got into Bitcoin, and how you started XBTO.
Yeah, it's a story I've told before. I get better at it every time I say it. And so, I started 20 years ago or so in derivatives trading at a hedge fund in New York. Spent a number of years just studying various products, various markets, being stuck in front of a screen mostly. And then basically left right before the financial crisis of 2008. Got lucky, spent a couple of years just doing a little bit of taking some time, just thinking about my next move. Did some consulting for banks around the world, Korea, Japan, it's places like in Caribbean. It really went far and wide. And then I started my own company, and then I kind of fell down the rabbit hole of Bitcoin in kind of 2010, slowly, right? As the white paper started getting disseminated a little bit more on the internet. I was forwarded to it a few times, read it a few times, and started to think about what it really meant to have this new technology, a way to move money around in a sort of trustless fashion, and the ability to make it divisible, all of the features that make Bitcoin amazing today, right? A lot of people still don't understand Bitcoin, but the more time you spend doing Bitcoin, thinking about Bitcoin, the more you become a fervent believer in it. And so here we are, at $60-some thousand, almost near the highs. I started a company based on Bitcoin because it's called XBTO, and XBT is the ISO code for Bitcoin. And back in the day, that's all there was Bitcoin. Ethereum was not even really something. And we effectively built a company around Bitcoin. It was myself and two partners, Walton and Rashad. Walton's more on the quant side, Rashad's more on the tech side. I was more on the trading and business side. And then we sort of built XBTO to what it is today, which is about 92 people worldwide, regulated primarily in Bermuda. We're going to be regulated in other jurisdictions, including France and the UK and Abu Dhabi, and those are slated for this year. It's a company that grew from being a proprietary trader, so just understanding Bitcoin very, very deeply, and also bringing in our understanding of financial markets and thinking, okay, well, what does it mean to have this asset? What does it look like? the most, and how do we make it successful far and wide, right? In terms of how do we build that network effect. The network effect is really what makes Bitcoin valuable. It has, of course, an amazing technology behind it, but the technology as time goes on becomes less and less important, and it becomes more about the network. And so that is basically, sort of what drives XBTO is to make that network grow. And we have a number of products that we, 3 lines of products: a platform, an asset manager, and a capital market. And they all basically vie to make Bitcoin and effectively potentially other networks successful in the long run. But we're Bitcoin first, and that's what we focus on most of the time, because it is 50% of the network, right? I mean, at the end of the day, if you look at dominance, I do believe that Bitcoin will always be around. It will be sort of the refuge currency of the world of crypto. Right now, we're still in a fiat kind of based world, but that's slowly changing.
Yeah, and I think what the market cap statistic I think is inherently biased against Bitcoin, because it's very easy to create a new coin that has a significant market cap without having to actually generate any real demand for it. So you can just list it on an exchange, and the cost of getting a coin listed on an exchange is a fraction of the market cap that you can get to show up. So when you're calculating the dominance, effectively, you're always rigging the metric essentially in favor of this fake liquidity creation. But if you really think in terms of liquidity, then I think Bitcoin is a lot more than just 50 or 55% or whatever it is. And it's ultimately Bitcoin money is a winner take all game. People look for the thing that is the most liquid. That's what makes money. So it's an advantage that continues to remain inherent. It continues to multiply over time. So the interesting thing I found about XBTO products, I think, is now you've started this new fund called Diamond Hands, which is I think the first fund since Tour de Meester tried to do this about 7 years ago, maybe, or something like that. And we've had Tour on this show before, and he discussed this with us. And what you guys are doing with this fund is that you're offering a yield in Bitcoin. And the fund is denominated in Bitcoin. But here, to be clear, you're not offering a yield in the sense of a fixed percentage, like give us your Bitcoin, we're going to lend it out and we'll give you 3% or 5% or 7%. You're actually trading with the Bitcoin and offering a rules-based option selling strategy. And you're just allowing people to take part in that option selling strategy to supposedly or hopefully get a positive yield in Bitcoin. So I think this is interesting because one of the things that Tour and I and several other people keep talking about in terms of the failings of the fiat financial system is that they're all denominating their money in fiat, and fiat is a melting ice cube, and so it's always losing value. So it's like winning a race against sick kids. It's not exactly a great achievement to outperform fiat when fiat is built to underperform everything. So the tricky part, of course, is to be able to offer returns in Bitcoin terms. And that's something that, if you were to measure most asset managers by this, they would all, first of all, get no bonuses, and they would all be out of a job. If you look at how much they've underperformed Bitcoin, pretty much everybody, from institutional investors to hedge funds to market traders, pretty much everybody can't beat that bar on any kind of time frame beyond 4 or 5 years. It's almost impossible. But you guys are trying. So what's the deal there?
We're not trying. We're succeeding. Well, I think it takes a special firm to be doing something like that. I think it takes someone that's been in the market for a long time that really believes in the ethos of crypto. It really takes a crypto native firm. We started in 2015 with a couple $100,000, and without really raising any capital, outside capital, we are where we are. So we've done very well. Obviously outperforming dollar returns, but also outperforming Bitcoin in certain ways. And so this new fund is a little bit of a rescaled version of what we did before. Remember, before there was it was a different market in 2015. There were no options. There was no vol trading, or not actual vol trading. You could make money trading, sort of the implied volatility, the volatility of the market in terms of the basis, in terms of trading spot versus the future. And back then, that basis vol was huge, right? You could really make a lot of money trading that basis over and beyond what Bitcoin returns were. So today, what we've created is a series of funds that are crypto native, that give you return in the currency that you've chosen. So for Bitcoin, you give us your Bitcoin, and we basically construct a portfolio of options that effectively have a target volatility, and we effectively are mostly net sellers, of course, of options, because we are extricating sort of premium out of the market. We do that systematically. So we have this Diamond Hand series fund denominated in Bitcoin, and that is basically trying to take out premium out of the market by selling options. And those are, we sell puts, we don't sell calls. So effectively, you keep the performance of your currency. So if you're tendering Bitcoin to us, we keep the Bitcoin, and we try to make Bitcoin performance over and beyond the principal that you've given us. Okay. This is done through, a fund that gives you monthly liquidity. And so it's pretty liquid. You can get out, fairly often, and you can contribute to it pretty often as well. Basically on a monthly basis. It is for people who want to hold Bitcoin over the long term. It is for people who want to have additional returns over the Bitcoin price. The returns are for the most part all positive in the last few years. Actually, they are positive in all of the years that we've run this. The actual fund started in the beginning of the year, but we have data from before. And so, we're looking to do that in potentially other currencies. We have one for Ethereum, and it is for a specific type of investor who's really looking to hold this over the long term, who really believes in Bitcoin for the long term. And we're very excited to offer this product. It's not a product that's that easy to do for most asset managers. First of all, you're holding the actual physical. It's not, you can't really, it's not sort of synthetic dollar returns. It's actually Bitcoin returns. You're actually getting Bitcoin. And so that's not something that is easy to come by. And so we think that that's a great product for the true believers.
Principles of Economics, my complete guide to understanding economics, is now available in hardcover, audiobook, and ebook from Saifedean.com, Amazon, and many more booksellers worldwide. And now I am also teaching a course based on this book on my website, Saifedean.com. Principles of Economics will run the whole academic year from September to June, and will have a new lecture every 2 weeks, as well as weekly live online discussion seminars open to learners from all over the world and from all walks of life. Whether you're a student, a professional, or a retiree, you are making economic decisions every day, and this course will arm you with the wisdom of centuries of economists to improve your economic decision making. You'll also get a free book of Principles of Economics if you sign up for the course. Go to Saifedean.com and sign up now. I guess the upside to this is that Bitcoin just has such enormous volatility on the upside and on the downside that even if you're outperforming everything else by holding in the long term and sticking through the painful drawdowns, there is a lot of room for improvement in that kind of regard if you're able to manage these downturns a little bit more effectively than just sitting there and taking a punch to the gut every morning and just keep on going and being stoic about it. In a sense, of course, this is difficult to do because most people don't know how to trade, and I don't trade, and I don't recommend people trade in general, because you will likely underperform it, because trading is a lot more difficult than you think it is. You underestimate just how much you're going to be influenced by your emotions, and you're not going to stick to your plan, and you're going to be reactive, and people react in the same kind of ways. And then when they try and trade, these things fall apart, and they end up having less Bitcoin because they try to trade it, even if they might have a kind of good thesis for how to execute for what it is that they want to do. They can most likely mess it up in terms of the execution, in terms of timing, in terms of small little mistakes that end up costing them a lot. And so for most people, I don't think it makes sense to trade. But I guess here, the draw is that you're having professionals trading in a way that can protect you on the downside. I think this is really the idea, that because you're using your trading position in a certain way, you should, if there is a 60, 70, 80% drawdown, you're going to be suffering less of a drawdown in this fund. So I think at a certain point, if you don't know how to trade, but your Bitcoin hodl position increases, I guess the case here is give some of it to professionals who are able to trade it in a way that can protect you slightly on the downside, at least with a part of your portfolio.
The volatility of the actual Bitcoin return is actually quite low, because if you look at things in dollars, yeah, you get emotional and you're like, I'm down 80% on my Bitcoin. But one Bitcoin equals one Bitcoin. So one Bitcoin at 60,000 is still a Bitcoin at 20,000. So your drawdowns when you're looking at this fund is actually it's not dramatic, but you just got to have to think about it in sort of Bitcoin P&L and Bitcoin terms, which is something we started doing very early, right? At XBTO. It's like, hey, it doesn't matter how many dollars you made. Did you make Bitcoin over time, right? And we look at things in Bitcoin equivalents. And that sort of changes your view of things, because obviously Bitcoin over the last 15 years has just gone up. And now we're near the highs. So if you made more Bitcoin over that period, you have been winning pretty much against any asset class, right? So we're not looking to make 50% on your Bitcoin per year, right? And we're looking to make between 7 and 14%, right? So it's not crazy returns, and your vol is going to be somewhere in that range as well. It's not. You're not going to have dramatic drawdowns in Bitcoin terms. So we think that if you're committed to a 10-year trade on your Bitcoin and you give us your Bitcoin, I think you're going to be very happy over the long term. Because look, the reality is Bitcoin is a volatile asset against dollars. People ascribe to it high volatility, and you're basically saying, well, I don't really care about the volatility over the long term because I want to own my Bitcoin. And if it's trading at 80% vol, then somebody really is thinking that it can be worth any kind of price, which you don't care about really. You care about that Bitcoin's going to be around and higher in the next sort of 10 years. So effectively, that's really the theory behind it. It's so you're selling put over time in an asset that against dollars, or basically against anything, has been going up. So technically, mathematically, systematically, you're likely to make money. Sometimes you're going to have a little bit of drawdown, but that's the play. Now, I would say you have to be very careful how you construct your option portfolio, because if you're over levered and you're not careful, you could hurt yourself, right? So you have to have professional help. And that's, I think, where we come in, right? Anybody can go on Deribit, for example, and go and sell puts. The problem with that is then you're instilling, emotions. You are, if you don't have a proper strategy, you are going to be your own worst enemy, and you might lose your Bitcoin, which is absolutely what you don't want to do. So potentially best to just let us do that work for you. And it's not extremely expensive my team can talk about sort of commercials and things like that separately. But generally speaking, I mean, that's sort of the idea. The idea is to really make sure that long-term holders, people who are not professional traders, can just benefit from Bitcoin returns on their Bitcoin principal, which is what everyone will want, I think, in the future.
Yeah, I think eventually it's going to be the case. And I think at this point, it's difficult to find this happening in actual businesses that are selling goods and services, because the vast majority of goods and services are still denominated in dollars. And so you're still going to have to be making all of your economic calculation in dollars. And so you are playing by the dollar metric, but
the dollar standard, right?
The dollar standard, whether
we like it or not.
Exactly. I think this is, a lot of people say that this is, there's a lot of people who think that you should just completely separate yourself from it, but it is difficult. It is difficult to completely separate from a dollar standard, because ultimately, unless you're in the Bitcoin space, unless you're working in Bitcoin, which is something that applies to me, but I'm very not typical. My website sells courses and books to an audience that's mostly Bitcoiners. But for the vast majority of people, your suppliers and your sellers, everybody you buy from and sell to, is going to likely be in dollars. And so you need to perform your economic calculation in the currency that allows you to serve them. But over time, this, of course, changes as Bitcoin's value goes up. Its fraction of the world's cash reserves increases, and then it becomes used more and more as a form of money. And then you'll see this happening more and more. But you're putting it out there, and you're publishing the numbers of this strategy. So you said that you were backtesting it over the past few years, and it did well, which I think would be predictable, because obviously that's going to color your perception of how you construct things. It's going to have to be based on how things went in the last few years. But since this year you started, it's been making, what have the returns been like?
Well, no down month so far. It's been a good year. I don't know exactly where we are. I think maybe 3-4% up on the year at least. So pretty much where you want to be, near the highs. If you're targeting 8 to 10%, I think that's where we are. We'll know more at the end of the month of June. We're closing in on the month of June. It seems like it's a positive month as well, even though the market has retraced a little bit from 70,000 to where we're sitting right now at 62,660. So yeah, should be okay. If it stays around these levels, should be a positive month.
Excellent. Okay, so what else are you guys offering at XBTO? What else do you offer your clients and customers, and who are your clients? Is it mostly individuals or institutions?
Yeah, it's both. It's mostly high net worth individuals and institutions. We have minimums. We work with a lot of the OGs, and we're more about selective. It's more about fewer numbers, but sort of white glove service than it is about sort of retail and large amounts of customers, right? So it's just higher balances, and we're just closer to them, and we have a number of other products that we can advise them on. So the Diamond Hand series is really for long-term hodlers, for those that are more in the dollar space, that want to have some exposure, but not necessarily a huge directional exposure. We have a trend fund. The trend fund is a long short fund, a little bit like long short equities. So in down trends, you're going to go short Bitcoin. In uptrends, you're going to be long Bitcoin. It's pretty efficient. It's not perfect. It's done quite well over the years. It's up this month. And so that's sort of like gives you dollar returns. It's not in currency return, in cryptocurrency return. but it is for someone who wants to take a step in and says, you know what, there's some volatility in this asset class. I don't know if it's going to be around forever, but I recognize that is a very trendy instrument, and I want to take advantage of that. So it's a great product to be in a sort of portfolio of other funds. It'll provide some nice sharp improvements. Sharp is basically a risk return metric, right? That calculates the performance over your volatility. For those that don't know what Sharp is, just want to make sure I don't go down the sort of rabbit hole of lingo that people don't understand. But I think most of your listeners are pretty sophisticated. In any case, so that's the trend fund. Then we have a quantitative fund, systematic fund, which trades about a number of different strategies, 7 to 8 strategies, and they're all decorrelated strategies. So they all try to take advantage of different market structure. And that one, you know, it really depends on a number of variables. So you can't really say exactly by looking at the data with your own eyes, whether it's going to be a good year or a bad year. It's based on dispersion. It looks at things in much more broadly in terms of the instruments, right, in crypto, right? So you might have a top 100 cryptocurrency basket, and then in there, the algo is choosing what to go long, what to go short, in what amounts, and it has event-driven things in it, like if there's the Fed or if there's a tweet going on. So there's a lot of different things coming into play to sort of inform the algo as to whether to go long or short. So that's pretty cool. And then we basically are doing a yield fund. A yield fund is more your traditional yield fund where you're borrowing and lending crypto assets, in this case, Bitcoin. And that's coming, it's not live yet, but it'll be coming quite soon. So that's basically our sort of asset management products right now. We have managed accounts as well for those that want sort of an ad hoc, more tailor-made portfolio. If they want to say, I want to be long some Bitcoin, I want to be long some quant fund and some trend fund and some this and that. And those are for larger accounts. And so we can tailor that, right, in terms of, hey, what's your volatility target over a certain period? What are you looking to make in returns? And so that's something that we look to do as well for larger accounts. And then, you know, what we're trying to do is take advantage of what blockchain can offer the world. And in that case, it's not so much about the cryptocurrencies that are that underpin those blockchains. It's more about, hey, whether you use the Bitcoin blockchain or another blockchain, what can you do to bring in real world assets onto the chain and make value out of those? So how do you make a traditional bond better by bringing it on chain? How do you make an equity better by bringing it on chain? So things like divisibility, transportability, composability, those are things that I think a secure blockchain like the Bitcoin blockchain brings a lot to the table, right? Today we see it in brokerages. It's a very complicated world. You know, you're still at, well, not anymore, but you were at T+2 for a while on settlements. That was capital inefficient like crazy. Now it's getting a little bit more efficient. And, you know, because a blockchain can settle things, well, on the Bitcoin blockchain, you have finality, 10, 20 minutes or so, depending on how much you value a confirmation. But, you know, effectively a blockchain is vastly sort of faster in terms of getting a settlement. Of course, it has transaction per second limits. So, you know, the main chain is probably for wholesale transactions. And then you're looking to do things like Lightning and other L2s to do more sort of retail transactions, smaller transactions, faster transactions, like you would want to do. You wouldn't want to put a $10 or $20 transaction on the main chain that can nicely fit on a Lightning. If you're going to do Visa transactions, you're certainly not going to compete with Visa on a main chain, but you might be able to do that on Lightning eventually. I mean, there are things that is still work in progress on L2. The market topology, the network topology is a little bit still work in progress. But over time, I think that's going to be resolved, and the user friendliness of using that will be completely, it will be fixed. Right now, it's a little bit clunky. It's a little bit difficult. You need to kind of know what you're doing. And so that brings some friction, and the friction is not good, right? You almost want to make it ubiquitous and sort of in the background and obfuscate the technology and make it like Apple Pay, where, it doesn't matter if you understand how it works in the background, you just tap your phone and you can sort of move value, across the table, across the ocean, etc.
The Bitcoin Standard podcast is brought to you by Orange Pill app, the Bitcoin-only social network that connects you with high-signal Bitcoiners, events, and now merchants as well. If you're like me and can't stop talking about Bitcoin, you know how challenging it can be to talk to the no-coiners and how nice it is to talk to someone who gets you. With the Orange Pill app, you can find the Bitcoiners near you and they can replace the no-coiners in your life. You can organize events and meetups with local Bitcoiners, and wherever you travel, you can meet up with local Bitcoiners, all while being as anonymous as you like. So if you want to build your local network of Bitcoiners, find a Bitcoin meetup or merchants accepting Bitcoin, head over to orangepillapp.com to sign up, or download the app from the App Store or Google Play Store and send me a DM so we can get connected. So I'm going to go back to what you were discussing about the lending and borrowing of Bitcoin. Now, I think the diamond hands strategy that you guys mentioned is interesting for me because it offers a yield without going to without essentially fixing the yield and making it based on an interest rate, which I think is inherently unsustainable in Bitcoin. And this is something that I've written about for a while. So I'm curious to hear your thoughts about this, because the way that I see it, there's no central bank in Bitcoin. So there's nobody who can make more Bitcoin to bail you out when push comes to shove. And this just, in my opinion, makes the entire model of interest-based lending, where the interest rate is fixed and independent of market returns, wherein you tell people, I'll take your Bitcoin, I'll give you 3%, and then I'll use it. And then if I make more than 3%, I keep the money. If I make less than 3%, then the money is, you still get your 3%. You're not sharing with me on the downside. I don't think this works in a world in which we have a hard money. I think eventually this breaks. And I think things like Mt. Gox, FTX, BlockFi, Celsius are all examples about why this thing isn't really sustainable. Now, I'm not trying to jinx you or anything, but you've been holding out so far. So I want you to give me your sales pitch for why you think this is sustainable, how you think you could withstand the extreme volatility that exists in Bitcoin, which is both on the downside and on the upside, because this can also be a problem for you on the upside if Bitcoin continues to increase in value. And then you have a problem. How do you give everybody their 5% that you've promised them when these 5% continue to increase in valuation? So ultimately, if you've made interest payment promises that are larger than the shortfall that you have in terms of your Bitcoin, because you don't have as much Bitcoin as you need, then you might not be able to buy it back, because you might not have the resources to get it back when your other assets are depreciating in face of Bitcoin. So we saw the FTX model, which is on the downside, but I think we could see something else similar on the upside, where you're unable to pay all of the interest because Bitcoin is appreciating so much and you can't buy Bitcoin with the rest of your Bitcoin, non-Bitcoin assets.
Correct. Yeah. So without speaking about tail events, effectively, there's an interest rate at which, if you think about it in dollar terms, if I'm borrowing Bitcoin at 3%, and there's this expectation that Bitcoin goes up, call it 3x a year, right? Then that means that effectively you are going to be paying 9% at the end of the day in dollar terms, right? So you borrow at 3% Bitcoin when it's at 20,000. Now it's at 60,000. You effectively are now paying 9%. So if you're extricating yield from the dollar economy, which means that you took those Bitcoin, you hedged those Bitcoin at a cost, and you're basically now, you don't care if Bitcoin goes up or down, right? Because you're hedged, right? It has a cost, but so long as you're making money in dollar terms over and beyond that cost, then you're okay, right? It is, the problem with that is that there are very, very few firms that can do this consistently, systematically, that, you know, and be able to do that and extricate from the market crypto native yields. And then again, there's the bigger risk is counterparty risk, right? You're taking counterparty risk quite often to many lenders or many borrowers. And so that's potentially your biggest risk, right? Obviously, you're trusting that the Bitcoin that you lent will come back because the person or the entity that borrowed it had the ability to not even make money, but at least retain the principal that was lent, right? And so that is a pretty big bet if you do that at scale. There are some very good firms out there that can do it. But I would just say, you know, in a world where you're correct, right? The money supply is fixed. So you're not getting bailed out by a growing money supply where, hey, you know what, it's okay because inflation and this and that, and the Fed's going to bail us out and we're going to have 20% more dollars next year than we had this year, which means, you know, everything kind of goes up in dollar terms. In Bitcoin, you don't have that, right? So in a rising Bitcoin, if you're not hedged, you're not careful, if you're trying to pull yield out of dollars, but you have a Bitcoin liability, then you're kind of asking to get hurt, right? So you have to be aware that Bitcoin will go up because for now in the last 15 years, that's been the reality of Bitcoin. And if you're ready to accept that, then you have to price the sort of that interest rate, right? And I would say that it's, you know, there is a fair interest rate. It's probably south of what the dollar is, I would say significantly. Then, you know, you have counterparty risk and it depends if it's unsecured or secured. And so there's a way to kind of figure out what a fair interest rate would be for Bitcoin where you're not taking crazy amounts of risk, right? But again, you're right. If it goes to $1 million tomorrow and someone is not hedged properly, then, you know, those Bitcoins are gone, right? I mean, that's the truth.
Yeah. I think this is one of those things that I keep talking about this, but nobody really, I think, agrees with me, and it's contentious thing on every front. Where mainstream economists or the Austrian economists, I think, equally find this objectionable. But the way that I see it is that if we had a fixed money supply economy like Bitcoin, and we didn't have banking monopolies, which was the case in gold. So gold, it was increasing at around 1.5%, 2% per year. And because it was so expensive to move around, it was effectively geographically monopolized with central banks. All of that allows for these inefficiencies in the banking market. But I think if you had some form of money that's like Bitcoin, I think eventually you get to a point where there is no more interest rate left. Because I think in that kind of world, first of all, because the money appreciates, capital accumulates so much that we have an abundance of capital because people's savings keep going up in value. So people save more and their savings go up. And then because people have a lot of savings become very, very cheap. So the cost of getting somebody to give you their savings, I think will go to zero, because the alternative for them is that they have to store the savings themselves. So they have to pay for them. So the cost of carrying money is not zero. It's never zero. You have to store it, and you also incur the risk. But if you lend it out, you don't have to pay storage, and you are outsourcing the risk to somebody else. It's his liability. If they get stolen, he has to pay you back. So therefore, I think people would be lending for free in a world in which money is hard. And so I find it interesting to see whether this model can continue to work on a Bitcoin economy when there's still we're still living in a dollar world. There are still interest rates out there, and interest rates exist. So you would think that, naturally speaking, if it's just another form of money, that through arbitrage, the interest rate on Bitcoin would be the same as the interest rate on fiat. But of course, it's not the same because of all of the price volatility in Bitcoin. That means that the difference in interest rate also accounts for the difference in the expectation or the expectation of the difference, the future difference in market value of the two currencies. So it'll be interesting to see how this continues to evolve. Best of luck.
Thanks. Maybe to add to that, in a world where there are no fiat currencies, let's just say there's just Bitcoin, you're effectively fighting to get more piece of the pie, right? And so there will always be companies that are accumulating profits at a certain rate, say Apple or Microsoft or Amazon, right? I mean, they get more and more of the share of a certain sort of money supply, if you were to put it this way, right? So paying interest for these firms is basically giving away a piece of the percentage of their profits, right? So if they're doing 10 to 15% net profit margins a year, right? Would they be willing to spend 3% in interest to scale their operation faster? Because in any case, they're doing 10 to 15, they probably would, right? So they would not be against borrowing at 3% if they can, in Bitcoin terms, do 10 to 15%, which those net profit margins would probably come down in the Bitcoin economy because it's going to get harder and harder to make real amounts of Bitcoin in a currency that can only get harder, right? And so that's really what will be interesting to see over time. Now, obviously, we'll have to see if the Bitcoin standard comes to play and hyper Bitcoinization happens, right? Where this is all sort of, very, very theoretical. But I would just say that I would never lend my Bitcoin at 0% because why would I do that? I'm taking counterparty risk. And so I think it could be minute, it could be small, it could be 0.5%, it could be a quarter of a basis point. But I think it's going to have to be something positive. And that's, because otherwise, what's the point? Now, I will say you have some weird things that can happen in the fiat world. Like, for example, in Swiss at one point, or in Japan, you had negative interest rates. That's a bit weird, right? If you think about it, why would you lend to a corporate at negative interest rate, right? At some point, I think Nestle was borrowing at negative interest rate. You basically paying Nestle to borrow, which is kind of crazy when you think about it. But I guess it can happen. I'm just thinking, just sort of 90% of the time, it's not very natural for one to sort of give away or lend their Bitcoin, which is a fraction of a whole that's known, which is, X over 21 million, to someone else and not be paid for it, right? So that's, I think, my theory.
Yeah, well, the way that I see it is that you would be lending it, but not for a fixed interest rate. You would be lending it for an equity stake. I mean, effectively, you're not lending it, you're investing equity. So I think...
Oh, yeah. I see what you're saying.
In that world, I think banking falls into two distinct jobs. On the one hand, there's deposit banking, where I give you my money and I pay you so that you keep it safe and also make it available for me so that I could get it on my phone whenever I want. But, you maintain the private keys. And I think that's a valid business model that's going to continue on Bitcoin or anything, because there's value to not having all of your wealth on you. I think that's going to continue to be the case. There will always be people who want to have others take custody of some of their money at least. And then the other thing is, if you want to earn money on this Bitcoin, I imagine that in a world in which there's an enormous abundance of capital, because money keeps appreciating. Imagine a world, by today's standard, imagine the average person has $5 million in savings. So if you're middle class, you have $5 million in today's purchasing power in saving. In that kind of world, if you wanted to start a business and you needed $1 million to start a business, there's no shortage of people who would be willing to give you that money if they like your business. So the interest rate that they would take, in my mind, would, because of the abundance of capital, the idea that you would, the interest rate on the money keeps dropping to the point where it declines so much that people don't want a fixed interest rate. But if they want to take part in the project, they'll take an equity stake. And so you get either deposit banking or the equity investment banking, I think.
Yeah, in certain parts of this world, charging interest is illegal. So maybe we should make it illegal in Bitcoin.
Well, this is my theory is that effectively what happens if you keep interest rates legal, but you have peace and prosperity and money that appreciates and no inflation, then interest rates keep declining. That's why before World War I, interest rates were around 2.5%, and they'd been on like a 2-3 century downward trend. And if World War I didn't happen and we stayed on the gold standard and there wasn't tens of millions of people dead over the coming few decades, I think the interest rates would have continued to drop, and then we would have ended up in a world where we end up with equity investing and deposit banking, effectively like what Islamic Sharia banking does. But Islamic Sharia tries to arrive at this through religious dictate, whereas I believe the market leads to this. And I'm building it on what the Austrian economists say, even though they don't agree. So it's a pretty contentious thing, as I said, but we'll see. And that's one of the many things to look forward to about a Bitcoin world, seeing how this plays out. Mm-hmm. Okay, well, you've also started doing more activities in the Gulf. You've opened up in Abu Dhabi. What are your thoughts on the market there? It seems to be that, I'm not very familiar with the situation over there, of the industry over there, but there's a lot of hype around it, but not a lot of focus in terms of the long term. What do you think?
I think Abu Dhabi and Dubai and the Gulf in general are a sort of new place. Technically, it's a kind of a new place, especially Dubai and Abu Dhabi. It's very dynamic. It's grown enormously in the last 30 to 40 years. And it's a natural place for new ideas and new technologies to be adopted quickly. And so I think the regulators are looking at this quite carefully. I think the rulers are looking at this and saying, hey, this is a societal trend. It's a societal shift. It is likely going to be an important piece of the future. And I don't know if you spent some time in Abu Dhabi with me not too long ago. You see, everything is quite new and very efficient, and I think it's it makes sense for digital currencies to find its place there. And so I think the regulators are forward thinking, forward looking, and they want to make it a place for innovators to come in and do that, innovate. And so we are going to be, we set up in Abu Dhabi maybe a year ago now. We're in Hub 71, and we are going to be licensed there in Abu Dhabi. Potentially, we'll also get licensed in Dubai. Maybe, the idea is there's tremendous amounts of wealth in the region, and it makes total sense for us to have a place there. And so that's really sort of the theory behind it. That's the thesis. We really enjoyed the region. We think there's a lot of talent. There's a lot of people moving there. You see it through various conferences. There's a conferences every day in Dubai. They're not all the same size and all the same quality, but you can tell that it is a place that where things are happening. And so if you're not there, then you're not, I think you're missing out. So we're excited. We have an office of, I think, 3-4 people now. We're going to be increasing that over time. And, there are other places in Asia that are quite receptive of Bitcoin and cryptocurrencies in general. And, those are the places that we want to be in. We don't want to be fighting with regulators. We don't want to be fighting with governments. We think that that's a battle that in any case will be won. It's just that, it will take some time, right? It'll take a shift in generations. And it's it's a war of attrition, right? And so some firms are going at it head on, and that's great. And I support them very much. We're just trying to, use time as our main tool to defeat the current system.
Yeah, I think this is quite something that's quite underrated by people who haven't been to the Gulf. It's truly remarkable, as you said, the transformation that these places have witnessed. I remember when I was a kid, I used to live in Saudi Arabia as a child, and I remember going from Saudi Arabia to Europe or the US was an enormous experience. You're going from the desert to seeing skyscrapers, and it was amazing.
Exactly.
And I think looking at Bitcoin Twitter, I see something kind of the opposite happening right now, where you see Americans who live in places like LA and New York go to the Gulf and get amazed at the idea that, look, there's all these incredible cities, and they're all clean and shiny and nice, and they're safe. You get to walk around in the street and you don't get assaulted. You don't get surrounded by people trying to bother you. It's truly remarkable. And I think it's amazing that in the minds of many people in the West, the notion of a city being a freak show has just been completely normalized. This is what a city is. If you want normal people, you go to small towns. But if you go to a city, then it's just natural that it's going to be a zoo, it's going to be a jungle, that it's going to be having a lot of crime, it's going to have a lot of homelessness, a lot of vagrants. And in the Gulf, it's amazing because these are highly prosperous, highly productive cities, attracting people from all over the world. People in the Gulf people in the West have this idea that it's all built on slave labor, which is ridiculous. There is no slave labor. Everybody who goes there willingly chooses to get on an airplane to go there, and they do that because they get paid more than they would in other places. And people from all over the world go there. And it's an incredible story because the way that it is governed allows these cities to remain functional. It's remarkable, the difference between Abu Dhabi and New York, that you get all of the infrastructure of the first world. You get all of the advantages of being in a city, all of the advantages of being in an economic zone with a lot of people with very high productivity, without having to deal with all of the terrible uncivilized phenomena that you see in in other parts of the world. So it's really amazing. And of course I have my ideas about it. I think it's because they're monarchies, and it's because they don't have to win elections. They have to think long term, and they own the country. So the country is like a private business. And I think ultimately it's because their population is an immigrant population. So they're really, it's a government that has to compete for a population like they compete for customers. In the same way that Apple has to convince people to buy Apple phones, Dubai, Abu Dhabi, and Qatar and Bahrain, they have to convince people from all over the world to go there because their economies are far more sophisticated than the local population, which is, I think, in most of those countries, the local population is probably a minority compared to the foreigners. So you need the foreigners in order for the country to run. And so therefore, they're constantly trying out different ways of attracting the foreigners. So Dubai has copied the corporate code of law that came from the city of London, and that's what made it a big financial center. And they keep trying different things. And so naturally, one of them is going to continue to try out Bitcoin and crypto. And over time, they're going to experience and experiment with those things, and they're going to see what works and what not. And it seems to be a lot healthier as a way of organizing economic production, I think, than in much of the democratic world, where you walk around the streets and you see it's just the constant war of all against all. Everybody's constantly fighting, team red versus team blue, and everybody is completely self-righteous about it, and they don't want to compromise. And just giving people access to politics, I think, is a big mistake. This podcast is also brought to you by the Bitcoin Way, your professional Bitcoin IT team offering you personalized, secure, and comprehensive solutions for every step along your Bitcoin journey. The Bitcoin Way offer live concierge service to guide you with your Bitcoin cold storage, running your node, privacy best practices, inheritance planning, corporate strategy, and multi-sig solutions. They don't touch your coins, they guide you through the process of acquiring your coins and securing them. If you'd like to make your setup safer and more reliable, book a consult with them and see what they have to suggest. If you want to give someone the gift of Bitcoin, get them this professional service that will ensure they start off knowing exactly how to manage their coins and not lose them. Go to thebitcoinway.com and start Bitcoining more confidently.
We could talk about that for hours. And I think, it's a different political system. It's a different way of thinking about the world. I think sort of the old world, let's just put it this way now, the Western world is kind of stuck in a weird place right now, where everyone is, as you say, self-righteous and thinks they're on the right side of history, and they're not thinking about the big picture anymore. And it's just it's a little disconcerting, to be honest. It's hard to really sit here and look at these elections around the world that are going on, and understand really what it all means. It really, the U.S. is of course one, but we're seeing it in Western Europe as well. It's not like there's clear continuity and there's predictability. In a way, there's a lot of volatility in all of this, and that is not good. And what you see on TV, what you see going on in terms of population movements and sort of treatment of immigrations and just how that has spiraled out of control, completely out of control, where governments really has no real ability to sort of switch gears in any way. I mean, it's all about, you're going to have to borrow more because there's no chance that you're going to be able to tax more. You're already taxing in certain places 70%. I mean, if you're taxing at 70%, you're already doing something wrong, right? If you're taxing at 10 to 20%, I think it's natural that you need to make, there's some common good in taxes, right? Infrastructure, bridges and schools and roads and healthcare are certain things that you would think, as centralized planning makes sense, right? I mean, you don't necessarily want to privatize everything. I'm not a believer that everything needs to be privatized and fully liberal. But in any, I know you are. But it's like, abolish the FDA. Okay, so you abolish the FDA. Now you've got private firms that tell you what you can and cannot eat, drink. Maybe it's, it's really hard to think about it because, there's a lot of things that we take for granted in this world, right? That the stuff that you buy in a store is probably free of cyanide, for example. But it's free of cyanide because someone's either made an ethical decision that it will not have cyanide for profit reasons, or B, because you have an auditor that's sort of this divorced from the system that'll say, hey, what are you doing here? All your levels are out of whack, and you get fined for it. So I am kind of a believer in that somewhat, that there needs to be checks and balances in the system. Now, right? Look, 70%. What you'll do is push production away. You're going to charge. You're going to move people away, innovators away, entrepreneurs away to a system where, hey, it makes more sense. I can see where my tax dollars are going. If you go to New York, or you go to a lot of places in the U.S. specifically, because in Europe, in a way, you get a little bit more for your money. The taxes are a little bit more, but incrementally, I think it seems better managed. In the U.S., it's like the bridges are just falling down. I mean, literally. I mean, it's like, and would you leave the bridges to a private firm to completely manage? I don't know. I mean, they might just run into the ground just the way it is being run to the ground right now. And so I think, anyways, I think there's a tabula rasa that needs to happen at some point, because the debt is just completely out of control. And so you either have a meaningful debasement of the currency, or you have a full reset.
Yeah, it's difficult to predict how it plays out. I know people have been saying that it's reached the end of the game for 50 years now, and it just keeps ticking along. But yeah, we've reached the point. I think it's a really significant turning point when the interest expense is the single largest item on the federal budget, which is the case now. It's bigger than the defense budget. I mean, just look at how much murder the US government does all over the world. And it's paying more for interest than all of that murder, all of these incredible machines of raining death on the world.
Yeah.
They are still not as expensive as the debt that the American government has saddled its people with, or the world, really, not just the people, because it's all getting paid through inflation.
Right. That's right.
But yeah, it's really difficult to see a way out of this. I keep trying to not get into doomsday thinking, and that but yeah, as you said, it's going to have to either be massive devaluation of the currency or massive defaults to bondholders, both of which are going to be catastrophic. But I think arguably the arguably the devaluation of the currency is the less politically problematic of these. It's the one that's likely to lead to less riots and outrage in the street. I think they're just going to have to accept that the currency is going to continue to get more and more devalued. That's my guess.
That would be the best path, but I just don't know if at this velocity of debt, you're going, and maybe AI is the thing that sort of helps productivity to a point where, but what are you gonna do? You're gonna tax AI out the wazoo? I mean, the devaluation. Look, if it's a controlled devaluation, that's one thing, and it happens all the time. By the way, the dollar devalues every day, every month, every year, and that's been going on for 100 years and more. And so the question is, what is that rate of change? If that rate of change becomes anything north of like 10%, people are just, it becomes behavioral. It's sort of like, I don't know that I can trust this anymore, and it's that trust in the currency that defines the value of that currency. And so the numbers don't matter anymore at some point, right? It's all about people's belief that, my cup of coffee tomorrow will be the same price. If it is not the same price, then you start having a real problem. And so I don't know that we're there. We're not there in dollars, but we've been there in many other countries, Argentina, Lebanon, that well, Venezuela, and many countries in Africa. And so that's been seen. And look, fiat reserve currencies, like the French franc, like the florent, like the UK, the pound, They were once the number one currency in the world, and they've sort of lost there for a bunch of reasons, but they've lost their number one position. So right now, the dollar's what's great for the dollar is that it has its hegemony. Everything is priced in dollars. Everyone will accept a dollar anywhere in the world for the most part, right? And I think that's why stablecoins are kind of important for the U.S. government to realize that actually is a good thing, is because the more people use dollars, the more they need the dollars, the more there's trust in the dollar, and so that sort of slows down the issue of this devaluation. But you've got significant issues with the devaluation right now. I mean, if you believe the inflation numbers out of Fed, I think you're crazy, because clearly, at least if you look at healthcare or education, and you backtrack with whatever number the CPI has told you, you're just not there. It's not the same. And so the things that matter really have changed in value tremendously. The things that don't so matter, okay, who cares? But yeah. And so this sort of average that we look at and everybody's like trades on is kind of irrelevant. It doesn't matter. It doesn't mix, so that's why if you're earning in Bitcoin, you're making more money in Bitcoin of something that's finite and where a network effect is growing, then you will know you are winning. You are significantly winning. If it's just that you made 5% in dollars over a year, are you winning? I don't know. You're maybe winning from an absolute basis, but from a relative basis, my guess is you are not winning. You're getting behind.
Yeah.
I don't know by how much.
Yeah, I think my recommendation to people is to look at the price of the house that you would like to have. Look at your dream house. You think of the neighborhood where you would really want to live, and look at the kind of house you'd like to have in that neighborhood. And then look at what has happened to the price of that house over the last 5 years, 10 years, 15 years, how the price of that house has evolved, has changed, the annual rate of growth, calculate the starting value, last value, figure out the compound annual growth rate. That's the percentage at which the house is appreciating in dollar terms every year. Calculate that. And if that number, if your investment portfolio is not beating that number, then you're losing money. If your savings are not getting an interest rate that beats that in the bank, which they almost certainly are not, then you're losing money. Then the money you worked for 10 years ago, the savings that you put aside 10 years ago, that you invested 10 years ago, can get you less of the house that you want today. And the house is really the best metric for me, because the house is the single largest expense in most people's lives. Most people will never buy anything as expensive as their house, the vast majority of people. So it really matters how much house you can afford. Everything else, a lot of the prices of most of the things that we're buying, particularly technological goods, your laptop, your phone, that stuff keeps getting cheaper every year. Today you can get for $50, you can get a phone that 3 years ago cost $500, and they just keep getting cheaper and cheaper and cheaper. So that stuff doesn't really matter if you want to figure out what is happening to the wealth that you've worked for, compared to the price of a house, compared to the price of a medical procedure at the hospital that you want to go to, at the cost of hiring the doctor that you want to hire. All of these things go up at a rate that is higher than the rate of CPI that is given by the government. And that's why it's a completely meaningless number, and of course I discuss it in more detail in the Fiat Standard about why it's so mathematically invalid. But yeah, no, I agree with you. But, it does the job of convincing people that their 5-6% they're earning on their 40-60 portfolio is beating inflation.
All right.
So it works.
So they say.
Yeah. All right. Well, anything else you want to tell us about what you guys have been up to recently and what your plans are for the future?
Yeah, look, I mean, I think just to talk a little bit about the markets, maybe just briefly, I think we're around 62,000 right now. A lot of people are, it's funny how cycles go, right? You're 10% off from the highs, maybe a little bit more. All I see on crypto Twitter is, oh, it's the end of the world. It's a double top. It's Bitcoin's done, crypto's done. And there are still some, disbelievers, even at the highs. It's incredible. But it is those, in a way, it's those disbelievers that actually make the value of Bitcoin. Because if everyone was a believer, then it would be no, you'd be probably in the 90 percentile, right? As you would, I'd say we're still very early is the point. And so I think right now, on the tail of the ETF and the halving and all that, look, the math has not changed. The network effect has not changed. I think, people still live in a dollar world. They still need dollars. They still need to pay their taxes in fiat. They still need to buy their houses in fiat. And so it's obvious that you're going to have some, changes in the flows. So I think, we might see a little bit of a slow summer, maybe a little bit of a retracement, but I am very strongly believer that we are going to see 100,000, and a lot of these disbelievers will begrudgingly become believers. And so for us at XBTO, we're all about sort of converting, right? It's about converting people into this new system. But look, at the end of the day, this new system is not really so dissimilar to the old system. It's obviously it's a fixed pie, but you're still going to need your airlines and your real world stuff, right? You're still going to eat and you're still going to go to school. Maybe AI will make it that your school is a little bit more. Your teachers are going to change a little bit, but just generally speaking, you're still going to be a human with your the needs that a human has. And so it's not going to change everything. It's just going to change the way your relationship with money. And so, at XBTO, we're crypto native. We're built on those rails, on this philosophy. But it's all about making it make sense for traditional finance to become, to come on these rails, to be sort of crypto savvy, crypto familiar, right? And so right now there's just a ton of stuff that is just happening on TradFi that should not, I think, should be converting to Bitcoin rails and to crypto rails.
Yeah, no, I agree with you. I think it's going to continue to happen. It's very tempting for people to just get so carried away looking at the short-term price movement and they get really disappointed that it's not going the way that they want. But ultimately, I think just keep looking at the 5-year price movement. You shouldn't be selling Bitcoin 5 years before you buy it. And so if you are thinking about selling today, you shouldn't be selling Bitcoin that you didn't own 5 years ago. And if you owned it 5 years ago, then you're significantly up. What is it now? I'm trying to think, June 2019, Bitcoin was probably around 10,000 or something like that. So you're up sixfold. I mean, there are geniuses on Wall Street that have made 60% over those 5 years, and they are very, very happy with themselves. And if you're a Bitcoiner, you've made 500% just like that.
Yeah, no, that's right. I think the Bitcoin economy has to grow. Right now, we were discussing about like yield and extracting economic value from a Bitcoin economy, which is quite small right now. So it is hard to do, but it will grow. And that's really the point is, can you outperform the Bitcoin performance and think about less about the dollar and think more about what, is something that's global, transborder, and fixed asset should be your benchmark. I think, in terms of, even if you want to live in the dollar world, okay, that's fine. But look, the reality is there's this thing with a network effect that's growing, that's a fixed money supply, and it's in dollar terms is growing this much. So you should, at the very least, if you want to stay in the dollar world, doing as well, right? So I think that's the way we're thinking about things.
Yeah. Well, I wish you the best of luck, and thank you so much for joining us. And I hope we get to hang out again soon, like we did in Abu Dhabi soon.
Absolutely, 100%.
All right.
Let's do it.
Cheers, man.
All right, thanks.
Have a good day. Take care. Bye-bye.